Hello and welcome everyone. My name is Khalil and I am the moderator for today's webinar titled FX Trading Automation, Where's Next for the Buy Side? Thank you all for joining. Before I introduce our speakers, there's a few housekeeping points I'd like to cover. At the bottom of the webinar screen, you should see the toolbar. Use the toolbar to access a range of applications such as speaker information, where you can find emails and social media accounts, relevant sources of materials, and technical help. Click on an application and it should open on your screen. All applications are resizable and movable, so feel free to make your own setup. If you have questions, please submit your questions through the webinar via the Q&A box, and we'll try to answer them towards the end. Now, for the best viewing experience, we recommend closing all programs and browser sessions running in the background. This will help conserve the bandwidth. The webcast is being streamed through your computer, so for the best audio quality, please make sure your computer speakers and headset are up to full volume. Some networks cause the slides to advance more slowly than others, so logging off your VPN is recommended. If your slides are behind, you can refresh your page by pushing F5 on a Windows computer or Command R for Mac users. This will refresh the page. We value any feedback, so please do complete the pop-up survey at the end. We do appreciate it. And without any further ado, let me introduce our speakers. So joining me for the conversation is Refinitiv's Jill Sigelborn. Sorry about that, Jill. She's the head of FX All Trading. And Iskandra, he is global head of sales at FX Transactions. And Christoph Hock is also on the line. He is head of multi-asset trading at Union Investment. So let's just jump in with the first question. Can you share with us your view on the market disruptions during the recent months? And I want to start with you, Christoph.
Yeah, from our perspective, trading during the COVID crisis was quite challenging. Liquidity was in some of the asset classes a key topic. So we experienced massive difficulties in the corporate bond area, where from our observation, markets were dysfunctional before the central banks then were stepping in. Other asset classes like equities and also FX were working properly well. That's our observation. So FX markets in special were obviously significantly more volatile. Cost of trading increased, but on the other hand, it was possible with high execution quality to get fills for portfolio managers done. And the standards we lived pre-COVID, high standards delivering execution to portfolio managers, to our end investors, they were also fulfilled. Looking at technology, this was initially not a hurdle. We were quite lucky given the fact that already by the end of February, we started to equip all my traders with the necessary hardware and software for working from home. So when the crisis really started, beginning of March, we were able, with technology behind, to having had a hybrid working from home, working from the office, and this was from our perspective working extremely well.
So yeah, technology did play a big role in this working from home environment. How about you, Jill? What have you got to say on this?
Well, similar to what Christoph said, we have a wider sampling at Refinitiv, so we saw toward the end of February, when all this began, a huge scramble to get people set up in a work from home environment. And it took a couple of weeks, but we made great efforts. Our team was amazing to focus on ensuring that all of our clients had easy connectivity and could function the way they would have in the office in trading on our platform. I think there were other issues for our clients that we were able to accommodate even outside of their normal use of our platform, and that they were struggling with other means of connectivity. Certainly, setting up technology connectivity from home in this day and age isn't so difficult, but no one expected this to happen. So there were the other challenges that were at play were around phone connectivity. People didn't have all the phone lines. Being able to talk to their colleagues across, the desk or next to them was another issue. I think it put everyone sort of ill at ease to trade normally. I mean, it was a difficult time for all in every perspective. So, yeah, interesting times. Also, to what Christoph said, we saw spreads widening. Iskander will talk a little bit more later about, specifics that we saw on our platform that we can share with everyone. But interesting times for sure. And I think we're getting now to a more sort of new norm, I would say, where people are getting, I think, more comfortable with the way things are since, we don't see any end to this soon.
What about you, Iskander? What's your view on all this?
Yeah, let me add some data points to both what Jill and Christoph mentioned. So, at the beginning of March, we asked our clients, and we asked some 400 clients out of our huge franchise, exactly the question: where will you be working from? And look, 60% said we're going to work from home. 20% said we're going to work from a BCP location, and we had 15%. Saying, we're going to toggle between, office and home. So this was already a good indicator that, that our clients were really well prepared for any market disruption coming to them. And just like Jill said, as part of the survey, we asked them as well about the connectivity. 80% was relying on their corporate VPN not to fall over. And, I think we're all happy to say that, we have seen very, very little disruption on that side. I think my personal view is that, as an industry, I think we have done really well. I mean, again, we're going to talk a bit more about liquidity and some other statistics, but as an industry, we've really done well dealing with this, with this crisis in a virtual, working environment, be it in the office, be it at home, or at a new location.
Okay, so I just want to jump now to our first polling question. So this is for you guys at the audience. What has been your biggest challenge while working from home? Now the options are access to critical systems, communications and collaborations, spreads and liquidity access, and other. If you have an other option, you can submit this other answer in the Q&A function. So how about you guys? Who has had what's been the biggest challenge for you guys? Let's go to you, Iskander, out of those polling questions.
So actually, I think it would be actually a better idea to have Christoph just sharing first his experience, and then I will share some data, if that's okay.
Sure, Christoph.
Yeah, sure. Happy to jump in. So access to critical systems, as described before, from our perspective, this box ticked was working as usual. So we've had about a 50-50 split, 50% working from home, 50% working from the office. Communication and collaboration in a hybrid, in a digital and in-person way also was working extremely properly. So given the fact that we as a trading desk, we don't see us just as executors, so to say, but on the other hand, delivering market intelligence to our portfolio managers is also key, and that's why communication within the team and also communication to portfolio managers, we had to assure that it's up and running as usual, and via internal and external chats, via video conferencing, it was also working extremely well. Spreads and liquidity, that's what I mentioned before. Given the fact that we saw significantly higher than usual volatility, so for instance, when looking at the CVIX, which was jumping from 4.5 to 5 at one stage, peak crisis to 16.5-ish levels, this obviously had impact on the cost of trading. But all in all, I'm very happy and satisfied with the execution quality outcome.
Excellent.
Jill, do you want to jump in, or do you want to go into the Skandra? Do you want to jump in on after that?
I think Skandra's going to share some data.
Yeah. So, so Sarah, if you wouldn't mind bringing on slide number 1. So, look, guys, our venues, they have been really, really busy, right? And what we see here, in front of us is a graph of trade activity on our primary market. So Christoph already alluded to that, liquidity was an issue, and that's exactly what this graph is telling us. So there was a flight to quality in FX. So to be precise, we have seen over 2.5 times more trade activity, daily trade activity, going through our primary markets platform matching, right? The blue bars going from the end of Feb, all the way through the end of March. That's great activity in a primary market function. So 2.5 times our normal weekly activity normalized over this year. So if we compare that to activity on our multi-bank platform, then our multi-bank platform was up anywhere between 130, 150%. Obviously, the base is different. Our multi-bank platform in this case is doing something to the tune of 400 to 500 billion a day. Primary markets are typically a bit smaller than that. Think around the 50 billion mark. However, Sarah, could you get us to the next slide, please? So, primary market, really busy. Multi-bank platforms, and I can only speak for ourselves, but I can assume that any other platform, have hopefully seen the same experience, really busy too. So, over the same period, again, from the end of Feb, so when things started going lockdown, all the way to the end of March, we've seen a significant uptick in FX all daily quotes. And let me translate this in a different way. So what we're looking here at is actually the quoting frequency by bank engines, right? So at the height of lockdown, so let's call it middle of March, that week, our technology handled 4 times more traffic than on the normalized period. So we had a very well-functioning primary market doing 2.5, 3 times more trading activity, and we had a very, very busy multi-bank platform processing all the requests and trades of our community without, very, very little hiccups along the way. Can we go to the next slide? So Christoph mentioned something about spreads, liquidity. I just want to give you guys a flavor of what we can do with data and how we can visualize spread behavior from the banks in this case. So on the left, for me on the left, with the header FX matching, you see cable. That's a snapshot of the spreads in the different unit sizes, 1 unit, 5 unit, 10 units, behavior over time, right? And again, where it goes up, that's in the height of the lockdown. But you see, it has come down significantly, but not enough, or we're not back yet to the starting point of this year. On the right, you see the spreads. Banks are streaming through our platform. And again, I hope you guys can read the different, the keys. But basically, the blue line is the bigger sizes, so 10 to 25 units in cable. And the orangey red color, that's a 1 unit. Similar type of behavior. But what I find interesting is that when you look at the provider side of things, that spreads have normalized quicker than we have seen on the primary markets. Just a thought to leave it out there with you guys.
And just to add a few points to what Iskander shared, in the quote speed, we saw, so not only was there more activity in the market, as everyone knows, volatility was high, particularly in March, but we saw that the banks were all tweaking their system and their quote speeds were increased by, anywhere from 2-fold to 10-fold for certain liquidity providers. And to be honest, I think people are still on guard as to where the market's going. So we still haven't seen that change significantly. The quote speed is still there, even though volatility has decreased significantly. And regarding spreads, another few just tidbits is, while the spreads, again, were significantly wider in, toward the end of March, beginning of April, and then started to normalize after that, but certain currency pairs still stayed wide and are still wider than others, particularly EM currencies, but also some G10 currencies had continued to stay wider than other pairs as they started to compress. So it's been interesting.
So should we go see our poll results and see what the audience have answered? If you could take us to the poll results, please, Sarah. Okay, so I know that someone has answered in the other section. They're saying that they've really struggled to find IT resources. Sorry, I'm just having difficulties to see the results. There we go. And actually, the biggest winner out of that, which was the biggest challenge working from home, was communication and collaboration. So 46% of the audience voted that up. And then in second place, close with third, was access to critical systems. And third place was spreads and liquidity access. And then just our other person who was struggling with IT resources, which myself, I have as well, struggled with my IT resources. So any comments on those results, guys, or should we move on to our next question?
Yeah, I think that makes sense. I think that's, everything that we were seeing as well, and everything we just shared. So I think that's in line with what we're seeing as well. I think that's changing now. I think people are getting settled in with collaboration, communication, but there are still issues. When you're working virtually, you don't necessarily have, again, access to voice brokers. We saw a huge issue at the beginning of this, and maybe that was the result of the primary market getting so much volume, because it was very hard to reach your voice brokers when you didn't have 10 phone lines sitting in front of you that were being recorded, which is also another issue, particularly for the banks. So I think that makes a lot of sense. And, we've also, and Iskander can share more on this, but we've seen, we've had significant activity on our sales team over this period because clients want access to one system as real estate on their desk becomes more precious. They can't afford to use 10 different applications through the 1 or 2 screens that they have at home. So they want the one-size-fits-all solution, which we've been able to offer.
Have anything to add to that, Iskander?
No, that's fine. I will get back to this a little bit later.
Great. So now I want you guys to speak a bit about liquidity and the challenge in the market. Were there any specific patterns that emerged? I will lead with Christoph again, if you would like to start with that one.
Yeah, sure. More than happy to do so. As said, what we obviously experienced was that volatility was going through the roof, and especially in a business like FX, where the bulk of the orders are executed via risk transfer, via RFQ. It's not really a big surprise that risk appetite of dealers as a part of the COVID crisis was significantly reduced, and therefore cost of trading from a buy-side perspective went up. So that's something which definitely is not applicable for FX only, but also for the other asset classes. In equities, we saw that the proportion we trade via risk transfer was reduced significantly, and as a consequence, most of the business in equities we executed via electronic platforms, via algos. In FX, I mentioned it before, in some asset classes, emerging market credit, in high yield names, it was literally impossible to find any bit, and the ones you fed were 4, 5, 6 points away from where they were originally indicated. So therefore, risk transfer, as said, on the one hand reduced, and on the other hand, this was also an experience I think other buy-side firms had, wasn't that algo trading increased on the other hand. And so via algo trading, you've had the chance to have a longer period for executing. And looking at post-trade transaction cost analysis, our experience wasn't that with algos we achieved a much better execution quality than what we would have experienced when trading against risk transfer of dealers. So all in all, despite challenging liquidity situation, despite humongous intraday volatility, I'm very satisfied with the execution outcome we've experienced for our end investors.
And just to confirm what Christoph said, we saw a huge increase in algo usage especially during that period at the end of March, where spreads were wide. We saw many of our clients, some who hadn't used algos before, who started using algos. But overall, I think in general, what we just saw was people were changing the way they were executing, the strategies they were using to execute, and trying different things. We also saw a huge increase in appetite for our auto execution functionality. While people wanted to focus on moving the larger numbers in this challenging market, they wanted to get all those small tickets out of their portfolio so they could see the large ones and ensure that they didn't miss anything. So that was another big item for us, where we were setting up clients to use our auto execution functionality, some for the first time. Other themes that we saw in the market were, as I said earlier, just around desktop real estate. People were changing even what instruments they might use to hedge their portfolios, and we're using our platform to move from maybe using options to hedge to using forwards to hedge. It was definitely a change. I'd say the other area to highlight that we offered our clients, we scrambled to put this together. We wanted to give our clients as much transparency into the market as possible. We have a product called Trade Performance Analytics, and we started publishing to our buy-side clients spread data in various currency pairs that they could use to just see how the market was doing in general across our platform. And that was very well received by our clients, as people were nervous that they didn't have their traditional insights and communication channels open. So the more transparency we gave them around data, the more they appreciated it.
And do you have anything to add to that, Skandra?
No, look, I think it's all the obvious. We spoke about desktop real estate, liquidity, TCA or TPA, all very key. The one thing we haven't mentioned yet is that when you go through your trade performance analytics and you do find some of those pockets that your banks are not providing the liquidity in certain currency pairs or even in certain tenors, you might want to trade in. We do see, our clients taking advantage of, wider access of, banks being on a multi-bank platform like Excel, for example, and if you like, swapping out banks, so adding new banks to the liquidity to their bank panel, which they weren't dealing with previously or less so with, or trying out, a new provider. in a certain currency pair and even in a certain tenor.
Okay, so great. I just want to go on to our second poll question. So again, for you guys at home, how has the market disruption impacted your trade execution? Now, your options are increased use of algos, increased use of auto execution, increased voice flow, or again, same as before. And if you have another answer, please submit that answer in the Q&A function. So while they're just answering that, do you guys want to answer them questions, your poll questions? What would be for you, Skandra? Would you use, what was the biggest market disruption in your opinion? Was it increased use of algos, increased use of auto execution, increased voice flow, same as before, or something else?
I think this, I'm not going to be cheeky here, but I think it's all of the above, apart from same as before. I think everyone would say, look, life hasn't changed, trading life hasn't changed. I think we have been lucky. I think most people will have experienced, things we have not seen before in our lifetimes, volatility moves we haven't seen in our careers yet. So, and again, to the point Christoph made and Jill made, we've been speaking to clients, to prospects who were swapping out of, look, I can't do a risk transfer anymore on the phone, on the RFQ because of my rejection rate. I need to deal on the phone. But how do I book it? How do I make sure that I get my allocation still in the system? Well, guess what? We can help with that. Similarly, people, very mundane. It's like, never thought about auto execution. Now they do. You know why? Because, if you get the smaller stuff done, you create more space during the day. And when something like, Christoph alluded to, if dollar rand is moving around, and you have to deal in dollar rand, you want to pay attention, right? You want to make sure that you execute it, according to best practice. Or when you've got a big ticket stuff to do, what maybe was, 3 months ago, not a big ticket. In these markets, sometimes even 100 units in euro dollar can be a big ticket. Hence, you want to make sure that as much of your workflow is automated. So we see, it's been a learning process for a lot of our users in how to make the best use of the functionality we offer. It's typically like with your iPhone. I only use 10% of the functionality. How much do you use?
Exactly. Jill, do you want to add something to that?
No, not really. I think we've covered it. I think.
Okay. Shall we go over the results then? So 22% answered increased algos. And then we had 16.7% for increased use of auto execution and 16.7% for increased voice flows. And surprisingly, 44% of the audience voted for same as before. So I'm just going to read a question from the audience now. So this is a first question from our audience. A certain type of clients adapting less quickly, e.g., for example, asset managers versus commodity brokers. So just to repeat that for you guys, are certain types of clients adapting less quickly to this process?
Yeah.
Shall we go to Skandra on that one?
Yeah, let me take that away because we had a couple of live cases. So during COVID, we're still in COVID, obviously. During the initial phase of the lockdown, most of our conversations were actually with, for example, a corporate, who are, they were more on the sidelines witnessing what's happening because their trading frequency was less frequent. But they were already thinking if they have to trade, how do we trade? So we had, with those type of, clients, we had the discussion about execution channels. Then at the same time, we had discussions with the active traders, a hedge fund, or it could be commodity brokers, like how do I access liquidity? How do I get my best, my trades done, when I want to get them done? And then we had the asset management industry, and you look at most of the asset managers, during March, the house was on fire, right? They were working hard to mitigate some of the risk, to execute the flows, and now things have calmed down. Now they start to engage with, okay, so post-mortem, some of the processes worked, some of the processes didn't work. How can we fine-tune this, in the face of maybe another, bout of volatility around the corner to be able to deal with it more effectively?
Okay,
so that's
I have
the response
another
we have from segments.
So I have another question from the audience. This one is actually for you and Jill Scandra. So in your global remit, have you seen any differences between the execution strategies adopted in certain regions? Like what did we see in the Asian markets compared to the US markets? So if Jill and Scandra, you would like to tackle that one from our audience?
So I'll start and you can chime in, please. So the Asian markets are not as, I'd say, electronic as other regions. So, they were probably in some ways more challenged because they weren't set up electronically. So we're seeing a large move towards electronic trading in Asia. And that's been going on for quite some time, not just because of the pandemic, but sometimes issues like that bring to light how essential it is to create an electronic trading environment. So there's certainly a lot of, I would say, opportunity in the Asian market, whereas the US and EMEA region has already been, set up for that, or I should say North America and EMEA region. I think, the regulators, the compliance departments have been working and sort of been preparing for this for years, not necessarily this. I think now that list will grow and we will see, as Iskander pointed out, going forward, people are starting now to prepare for this being an incident that they have to expect in the future. I think that list just keeps growing every time we have an issue come up. And this year is not one year to let your guard down because we have the US presidential election, we have, Brexit adoption, the pandemic's not over, there is a lot going on and no one is sitting back and waiting. I think people are now getting on top of it and preparing for whatever might come.
Well, guys, I'm just a bit conscious of time. So I'm just going to ask you if you guys have any final remarks you would like to say to our audience. Now's the time to say your piece.
Maybe
so, Christoph, do you have any?
Yeah, sure. So given the fact that we find ourselves as a service and solutions desk for our portfolio managers and for our investors, what they can expect us is, regardless whether we talk about the pre-COVID, the COVID itself or the new normal after the COVID crisis, they can expect from us that we deliver best-in-class executions in all the various environments. And we as a trading desk, we have to ensure that we clearly fulfill this definition, this role, and that we were ahead of the curve and we remain ahead of the curve. And as said, generating alpha in all circumstances is clearly our key goal, what we've achieved so far.
Anything to add on to that, guys?
Just adding to that, Christoph. So, you brought actually, a topic for another webinar, best execution. Anyways, just joking about it. Look, guys, we have seen a lot, through our clients, we see a lot of best practices. We're here to help, to support the community. So if there's anything you guys are, wondering about, if you could do things differently, reach out to us. We got a good overview of what's happened in the primary markets, what's happening in secondary markets with corporates, asset managers, hedge funds. Feel free to challenge us on it.
And I'll just close with, we're taking stock in what we've just experienced and what we're continuing to experience and working on our strategy to accommodate the needs of our clients going forward to ensure that we continue to innovate and extend access to all the liquidity pools that we have in an operationally efficient way for clients who have those challenges around managing so many funds or corporate regional desks. So we are open for discussion with anyone if they want to discuss the future and what our plans are and what their plans are. We'd love to hear from you. So thank you.
Well, big thank you to Jill, Christoph and Skandra for joining us on this webinar. It's been a pleasure speaking with them. And a big thank you to the audience at home for signing in. We really hope you took a lot from this webinar. Don't forget, we'll be having episode 2. You're all registered for that, so we look forward to seeing you on that. And if you had a question which wasn't answered in the webinar, don't worry, we will answer that question directly. So from me and the whole team on the webinar, thank you for joining us today. It's been a pleasure to present this to you.
Thank you.
Thank you.
Thank you. Bye.
Thank you.